Good morning. Welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic is a good one, especially since today is December the 4th, 2025. A lot of individuals are looking to open their Solo 401k plan for the first time and utilize the Mega Backdoor Roth strategy. And a lot of our clients utilize my Solo 401k Financial for the Mega Backdoor Roth strategy. So stick around. We're going to unpack all of this today. So today we're going to hone in on S-Corp Solopreneurs who are looking to open a Solo 401k plan for tax year 2025. And they want to use Charles Schwab to hold their Mega Backdoor Roth Solo 401k funds. And we're going to talk about how you can do that by utilizing a Solo 401k plan from my Solo 401k Financial that allows for the Mega Backdoor Roth strategy. And then we can assist you in opening up the Schwab company retirement brokerage accounts at Schwab for the Solo 401k plan that allows for the Mega Backdoor Roth strategy. So welcome to our daily show. So this is your chance to ask questions. So go ahead and chat them over now. They can be surrounding today's topic or any other topic for that matter. Make sure to type them over now so that we can be sure to get to them all. So before we can even start talking about the Mega Backdoor Roth Solo 401k strategy, let's make sure you qualify to open a Solo 401k plan. So in order to open a Solo 401k plan, you have to be self-employed, which means you have to have a business, whether it's a sole proprietorship, S-Corp, C-Corp, partnership, LLC tax as an S-Corp, LLC tax as a sole prop, LLC tax as a corporation, whether you're a farmer and you file Schedule F, if you're a contractor and you file Schedule C because you receive a 1099-NEC for contracting work that you do, all those businesses qualify. So it's not necessarily the type of business that determines whether or not you're self-employed, and therefore you can open a Solo 401k plan. It's the underlying activity. That means you have to be doing the work. You have to be performing material services. So if you're simply investing or receive interest income or dividends or capital gains income, you would not qualify. Also, if you receive Social Security payments, even though those are taxable, you would not qualify either. So in order to open a Solo 401k plan, you have to be doing the work. So you got to walk the talk. You also cannot employ any non-owner full-time W-2 employees who work 1,000 hours or more in your business. Now, don't confuse that requirement, because with an S corporation, you have to be a W-2 employee of your S corporation if you're self-employed. But however, if your S corporation hires any non-owner employees who are W-2 and they work 1,000 hours or more in your business, you would not be eligible to open a Solo 401k plan. And you typically have to apply that test across all of your self-employed businesses. So if you have any business at all that employs any full-time W-2 employees, you most likely will not qualify to open a Solo 401k plan for any of those businesses. There's a percentage test you have to run as part of the control group regulations, affiliated service group regulations. We've actually done a webinar on that topic in the past. If you subscribe to our YouTube channel, where we have over 1,000 videos, you can find a series that we did on the control group regulations and eligibility requirements and so forth. But today's topic, again, we're honing in on S-Corp Solopreneurs who are looking to open a Solo 401k plan for tax year 2025 using my Solo 401k Financial in conjunction with Charles Schwab for the Mega Backdoor Roth Solo 401k strategy. We actually did a webinar yesterday on this same topic. However, it was opening it at Fidelity Investments, because Fidelity Investments will also provide what they refer to as non-prototype brokerage accounts for the Mega Backdoor Roth Solo 401k plan offered by my Solo 401k Financial. Now, if you're an advisor, we get a lot of institutional clients. We can help you get this set up at Altruist as well, even at Fidelity or Schwab on the institutional side for your clients. So we service not only institutional clients, but also retail clients. So we cover it all here at my Solo 401k Financial. We've been in business since 2009. We're the leaders in this space. We've opened up tens of thousands of plans. A lot of them have been for the Mega Backdoor Roth strategy. We were the first in this space to offer the Mega Backdoor Roth Solo 401k plan all the way back in 2013. So we have thousands of clients that have utilized the Mega Backdoor Roth strategy through the years. So we handle all the reporting for the Mega Backdoor Roth strategy as well, as you're going to find out. But back to the eligibility requirements. So in addition to making sure you don't hire anyone who is not an owner, who works 1,000 hours or more in your business as a W-2 employee, you can always exclude anyone who's under age 21, regardless of how many hours they work in your business, whether they're a W-2 employee or not. You can always exclude contractors as well from your S corporation. So we're gonna be unpacking all this today. Again, go ahead and type over your questions. They don't have to be specific to today's topic, and we'll go over those as they come in. Looks like we already have some questions coming in here. Here's a question. For this question, your type of self-employed business. We set up Green Candle Holdings Corporation during 2024 and made an S corporation election with the IRS. So I guess the right choice for this question is S corporation. That's exactly right. So it would not be C corporation, it would be S corporation. So yes, on our online application, which is how we collect the necessary information to help you meet the December 31st Solo 401k setup deadline, one of the questions we ask is, what's the name of your self-employed business and how is it taxed? Because we're going to list that self-employed business on your Solo 401k plan establishment documents. Another question here. Are you currently participating in a self-employed Solo 401k or individual 401k? Exactly. You're going to say false because if you don't have an existing Solo 401k plan, it's false. However, we have a lot of clients that have an existing Solo 401k plan, let's say over at Ascensus, over at T. Rowe Price, Invesco, Fidelity, Schwab, you name it, Chase Bank, Wells Fargo, and they want to move that Solo 401k to a Solo 401k from my Solo 401k Financial. That's one of the restatement. So that question there on an online application, that's the reason for that question, because if you have an existing Solo 401k plan already, we can restate that plan. We can pick it up and move it to a plan offered by my Solo 401k Financial that has all the bells and whistles, the Mega Backdoor Roth Solo 401k strategy, the ability to process Solo 401k participant loans, the $1,500 auto contribution credit, which is a way of the government subsidizing the cost of both opening and having a Solo 401k plan for years to come. You can also invest in equities, alternative investments like physical real estate, promissory notes, tax liens, and so forth. So that's where you would say yes if you already have an existing Solo 401k plan. Okay, let's see here. Let's see, look at the rest of your question. Can you also explain the $1,500 credit for auto enrollment feature? Once I open the accounts, Fidelity and my Solo 401k, do I need to enable something for auto enrollment or something to get the credit and make contributions every year to get the credit? What are the minimal elections needed from us to receive the $500 credit over 3 years? Great question, and we're actually going to be covering that topic here later in today's webinar. So we'll put a pin on that question for now. Okay, let's continue here. So why does this matter with regards to unlocking the Mega Backdoor Roth Solo 401k strategy for tax year 2025 using my Solo 401k Financial in conjunction with Charles Schwab? If your self-employed business is an S corporation or an LLC taxes an S corporation, well, it matters because the Mega Backdoor Roth strategy is a way to get more funds in your Roth Solo 401k indirectly above the typical annual limit. So it's the Solo 401k plan provider that chooses to provide the Mega Backdoor Roth strategy. So even though under the IRS code, you are allowed to utilize the Mega Backdoor Roth strategy, it's up to the Solo 401k plan provider as to whether or not they want to add that feature to the Solo 401k plan. Well, Schwab has made a business decision to not offer the Mega Backdoor Roth strategy in their Solo 401k plan. So yes, Charles Schwab offers their own Solo 401k plan, which allows for pre-tax Solo 401k contributions and Roth Solo 401k contributions, but it does not allow for the Mega Backdoor Roth strategy. However, the Solo 401k from my Solo 401k Financial is a custom plan that does allow for the Mega Backdoor Roth strategy, and our clients get to choose where they hold their money at. That's one of the reasons we have so many clients. We let them choose where to hold their money. After all, it's your money, so you should decide where to hold your darn funds. So you can choose to hold your funds at Charles Schwab, at Fidelity, your local bank, local credit union, Altruist, which is an institutional brokerage firm out there that a lot of our advisors use, LPL. So it's the plan documents. Now, again, today we're honing in on Charles Schwab. So again, Charles Schwab will provide brokerage accounts for a Solo 401k plan offered by my Solo 401k Financial, and we'll help you get those opened up at Schwab so that you can utilize the Mega Backdoor Roth Solo 401k strategy, and then we'll shepherd you with regards to calculating those contributions, making the contributions to the right types of brokerage accounts, to converting the funds, and finally reporting that Mega Backdoor Roth Solo 401k conversion to the IRS on Form 1099-R. So bottom line, here at my Solo 401k Financial, we do the full job from A through Z. Some providers out there simply tell you, well, here are some plan documents, work with your CPA and opening the accounts and doing the reporting. Well, not here. Here at my Solo 401k Financial, as I stated earlier, we've been processing Mega Backdoor Roth Solo 401k conversions since 2013. So we have close to 12 years of experience helping clients perform the Mega Backdoor Roth Solo 401k strategy from beginning to end. Okay, looks like we've got a question here. I need help with the deferral election form. Well, the deferral election form is a form that you don't have to fill out that form to make contributions because you're going to report contributions on your tax return. Let me share a link. Now, if you're opening the plan for the first time, we do provide the deferral election form where you opt out of contributing as part of the $1,500 contribution credit, but we're going to cover that more in more detail here in a moment. But if you need help filling out that deferral form, let me share a link where you can submit a support ticket and you can submit your questions, and then we can schedule a call with you if necessary. Give me a moment here. But first, let me send the link that goes over where to report Solo 401k contributions. They're reported on your personal and or business tax return, depending on how your self-employed business is taxed and the type of contribution you're making. Let me share this link here. So this link right here is how you report contributions. On the other hand, if you're a client of my Solo 401k Financial and you have questions on how to calculate contributions and so forth, or how to fill out a deferral form, go ahead and send us an email and we'll go ahead and send you line by line instructions, or we can schedule a call with you. Give me a moment here. Let me send the link to our support ticket. So just like Fidelity and Schwab have a support ticket system, so do we here at my Solo 401k Financial, which helps streamline all the work here. So go ahead and submit that support ticket there, and we'll go ahead and take a look at that. All right. Here's a question here. I am 65 and pay myself once a year. I have not done this yet and want to know which boxes to check on the deferral election for best tax benefit. Well, the contribution election form is not going to matter regarding your contribution types. You're going to be able to contribute to the plan, all contribution types, employee, employer, Roth, as well as voluntary after-tax solo 401k contributions. So go ahead and submit that support ticket, and we'll be happy to shepherd you through the contribution rules. But in short, it's not the completion of a form that determines whether you can contribute or not. It's the plan itself. The plan itself allows for contributions, all the various contribution types. And when you make contributions to a solo 401k plan, you have until your business tax return due date plus timely filed extension to make all contribution types. So for example, if you open a solo 401k plan here in 2025, you're going to have until next year in 2026 by your business tax return due date plus timely filed extension to make all contribution types, whether that's employee, employer, or voluntary after-tax solo 401k contributions. Let me share a link here regarding the solo 401k contribution deadlines. For example, if you're self-employed businesses taxes an S corporation, you're going to have until March 15 of 2026 to make all employee, employer, and voluntary after-tax solo 401k contributions for tax year 2025. And if you file an extension for your S-Corp, you're going to have until September 15 of 2026 to make all 2025 employee contributions, Roth, pre-tax, and voluntary after-tax, for example. So employee, employer, or voluntary after-tax. So a good question. Let's see here. So take a look at this link here regarding the contribution deadlines. It's got a really good chart that breaks down the contribution deadlines per entity type. So Schwab plus my solo 401k financial. So again, Charles Schwab's default is to not offer the Mega Backdoor Roth solo 401k for their solo 401k. Here is my solo 401k financial. Our plan does allow for the Mega Backdoor Roth solo 401k strategy, and you can use Schwab to hold the funds. So our plan allows for voluntary after-tax solo 401k contributions as well as conversions. You need to make sure you have a plan that allows for both of those features. And then you can convert those voluntary after-tax solo 401k funds to the Roth solo 401k or the Roth IRA. So how does the Mega Backdoor Roth solo 401k strategy work? Well, let's bring up a slide here. So let's take it. So number one, here's a slide here that outlines the contribution steps for the Mega Backdoor Roth Solo 401k strategy. So first, the maximum you can contribute to the voluntary after-tax solo 401k as part of the Mega Backdoor Roth strategy for tax year 2025 is $70,000. The rule is that you can contribute the overall 415C limit on an annual basis to the voluntary after-tax solo 401k and then subsequently convert it to the Roth solo 401k bucket, aka brokerage account, or to a Roth IRA. You get to choose. That's number one. Number two, for tax year 2025, that overall limit is $70,000. So you cannot contribute any more than $70,000 to the voluntary after-tax solo 401k brokerage account or bucket to then convert it to the Roth Solo 401k or the Roth IRA. So that means that if your S corporation is your self-employed business, the maximum gross wages that you need to report for tax year 2025 to fully maximize the Mega Backdoor Roth strategy is $70,000 in box one of your W-2. You don't need to pay yourself any more than $70,000. Why is that? Well, because the Mega Backdoor Roth Solo 401k strategy is a dollar for dollar calculation when making contributions. It's not like employer contributions, which are percentage based. With employer contributions, you can make it 25% of your W-2 wages as a contribution, as an employer profit sharing contribution. With the Mega Backdoor Roth Solo 401k strategy, it's a dollar for dollar calculation. So if you solely want to make voluntary after-tax solo 401k contributions and your self-employed business is taxed as an S corporation, for tax year 2025, you only have to pay yourself $70,000. That's the maximum you need to pay yourself to fully maximize the Mega Backdoor Roth Solo 401k strategy for tax year 2025. You would contribute that entire $70,000 to the voluntary after-tax solo 401k bucket and then convert it to the Roth Solo 401k. So this is an example of a one participant plan. Here's an example of a two participant plan. So with the one participant plan, and as well as a two participant plan, the business, the S corporation sponsors the plan. If it's a two participant plan, that oftentimes means that both spouses are participating in the same business. That is, they're self employed in the same S corporation or LLC taxes an S corporation, and therefore the LLC or the S corporation sponsors the solo 401k plan. So, one plan, both spouses are participating in the same plan. So, they're each going to have a total of 3 separate brokerage accounts for a total of 6 brokerage accounts between both spouses. So it's not 6 separate solo 401k plans, it's one solo 401k plan that allows for these various contribution types. That's pre-tax, Roth, and voluntary after-tax. Well, a solo 401k plan, just like a traditional 401k, is a defined contribution plan. Therefore, the IRS code requires that each participant's funds are separately tracked, and that's tracked by having separate brokerage accounts and also their fund sources. So pre-tax, Roth, and voluntary after-tax. Hence why if you have 2 participants in the solo 401k plan, that is 2 spouses who work in the same business, you're going to end up with a total of 6 separate holding accounts. So we would help you open up 6 separate brokerage accounts at Schwab if it's a 2 participant plan. If it's a 1 participant plan, it's only 3 brokerage accounts. Now, you don't have to make all these contributions every year. When you set up the plan, all these features are built into the plan that we offer at my solo 401k financial. So you're not going to lose the ability to make these contributions if you don't make them now or next year. That's always going to be part of the plan. So we can help you open up all these brokerage accounts now or some in 1 year and some in a different year. What is more, both spouses are now required to contribute to the plan every year. One spouse may contribute 1 year and the other doesn't, or both contribute. One spouse may only make employer contributions, the other spouse doesn't. This is not a traditional 401k. It's a single K, also known as a unit K, solo 401k, self-employed solo 401k. Some clients even call it a solo IRA, even though it's not a solo IRA. There's no such thing as a solo IRA. Once a 401k, solo means solo 401k. IRA is for individual retirement account, but that's a whole other topic. But bottom line is that with the solo 401k plan, you can make all these various contribution types. Now, when you utilize the Mega Backdoor Roth Solo 401k strategy, if you use Charles Schwab to hold the funds, we'll draft 3 sets of brokerage accounts here for you to help you open up those brokerage accounts at Schwab, and we'll fax those Schwab brokerage forms to Schwab for you. And then you're going to get an email from Schwab when those accounts are open and ready to be funded. So we'll handle the setup from A through Z for you. By not only do you complete our online application, we draft the plan documents, we then draft the brokerage forms at Schwab. We'll obtain the EIN number for the plan. We'll fax everything to Schwab. You'll get an email from Schwab once those accounts are open. One great thing about using Schwab or any other brokerage firm for that matter is that we never have access to your money. We don't want to have access to your funds. We don't need access to your funds to be your plan provider and assist you with the ongoing compliance support. So when you get that email from Schwab, only you will be able to access those accounts and view those accounts, but we'll be here to help you run calculations and perform the Mega Backdoor Roth strategy, including reporting it. So once you make that contribution to the voluntary after-tax solo 401k bucket, you're then going to convert those to the Roth Solo 401k. Then you're going to complete our online conversion form, which is found on the Forms tab of our page. So if you go to our main website on the top right-hand corner, there's a Forms tab. Click on that, and you're going to see all the different forms. You'll fill out that online form, and that's going to prompt us to file a Form 1099-R with the IRS, and a copy sent to you so that we report that Mega Backdoor Roth Solo 401k. So that's how it works with regards to the steps involved in the Mega Backdoor Roth strategy. Let me get back here and we'll take a look at some more questions here. Okay, let's see here. Okay, we don't have any other questions at the moment. Let's continue here. So if this information is helping you feel more confident about your future, please take 1 second to like and subscribe. It tells the platform that this information is valuable, which helps other solopreneurs like you to find it. Subscribing guarantees you receive notifications of all our crucial content that we deliver every day to help you secure your retirement. Let's continue here. So regarding the setup deadline for tax year 2025, here we are on December 4th, 2025. So if you're listening to this webinar live today, regarding the setup deadline for the Mega Backdoor Roth Solo 401k, if your business is taxed as an S corporation, you technically have until March 15 of 2026, or if you file a business tax return extension for your S corporation, you have until September 15 of 2026. So next year, to utilize the Mega Backdoor Roth Solo 401k strategy, that means opening the plan, making contributions. So technically, you don't have to set up your plan by December 31st of 2025 if you're trying to open it up solely for utilizing the Mega Backdoor Roth Solo 401k strategy. However, why wait? You might as well get it set up here in December since you still have the rest of the month. So that way you don't forget about it, and that way you can wait. And next year we can help you open up the brokerage accounts and make the contributions, or we can help you do it now. Now, if you want to be able to make employee contributions for tax year 2025, however, you do need to open the Solo 401k plan by December 31st of tax year 2025, so this year. However, that rule does not apply to both voluntary after-tax solo 401k contributions as part of the Mega Backdoor Roth strategy, or if you want to make employer profit-sharing contributions. It only applies if you want to make employee contributions, whether employee pre-tax contributions or employee Roth Solo 401k contributions. So if you're listening to this webinar on January 1st of 2026 and after, and you think you've missed the Mega Backdoor Roth Solo 401k deadline for tax year 2025, the good news is you have not, because under the regulations, and you have Secure Act 2.0 to thank for this, the voluntary after-tax solo 401k contributions, you can open the solo 401k plan by March 15 of 2026 or by September 15 of 2026 and make those voluntary after-tax solo 401k contributions for tax year 2025. So you have plenty of time. So what do you need to do by December 31st? Let's review. If you want to make employee solo 401k contributions or have the ability to do so, you need to set up the plan by December 31st of 2025. Now, if you are not planning to make employee contributions, but rather, let's say you're solely planning to make employer profit sharing contributions or voluntary after-tax solo 401k contributions, then you have until March 15 of 2026 or September 15 of 2026 to open the solo 401k plan and make contributions for tax year 2025. Now, as far as opening the solo 401k plan here in 2025, what does opening the plan exactly mean in the eyes of the IRS regulations? Well, that means that you simply need to sign the plan documents. A solo 401k plan is a retirement trust. So it's a separate entity. It has its own set of legal documents. And here at my solo 401k financial, we draft those documents. Once you complete our online application, if you use our services, we'll draft those solo 401k plan documents the same day. And then all you have to do is sign those solo 401k plan documents. As soon as you sign them, you have met the December 31st solo 401k setup deadline. And then you can enjoy the rest of the month. So all you have to do is sign those plan documents. So it's not when you open up the brokerage accounts, when you make the contribution, it's when you sign those plan documents that determines when the plan is effective. So if you sign them here in December, by December 31st of tax year 2025, then the plan will be effective immediately. And you're going to be able to make employee contributions, employer contributions, and voluntary after-tax solo 401k contributions next year. And we can help you open up the brokerage accounts or bank accounts now, here in 2025, or we can help you open those up next year by your business tax return due date plus time you file extension, and then you would also make the contributions at that time. So in short, if you're listening to this webinar towards the end of December, don't panic. All you have to do is sign the plan documents, and your plan will be effective immediately, and you're going to be able to make all contribution types: employee, employer, and voluntary after-tax solo 401k contributions next year in 2026 for tax year 2025. But there's still time if you're one of those individuals that wants to get everything set up by December 31st. That means open the brokerage accounts and make the contributions, but it's good to know that you don't have to. So we just talked about here what the establishment deadline really means. So again, just like any legal entity, a solo 401k, which is a retirement trust, is created by the underlying plan documents, the adoption agreement, trust agreement, and so forth. So establishing the plan means having the legal documents in place for the plan. So here's a good timeline for an S corporation. So setup timing by December 31st of 2025. If you set it up by then, which means you simply sign all the plan documents, then you're going to be able to make all contribution types: pre-tax employee, Roth employee, pre-tax employer, Roth employer, voluntary after-tax contributions. And you can make all those contributions by March 16 of 2026 or by September 15 of 2026 if you file a timely 1120S S-Corp tax return extension. What happens if you open the solo 401k plan after December 31st of 2025? Well, you're not going to be able to make employee contributions, but you are going to be able to make voluntary after-tax solo 401k contributions, as well as employer profit-sharing contributions. Okay, let's keep going here. So what is the Mega Backdoor Roth Solo 401k strategy? We've sort of touched on this already, but hey, it doesn't hurt to go over it again, especially since the Mega Backdoor Roth Solo 401k strategy is so advantageous from a long-term planning perspective. So with the Mega Backdoor Roth Solo 401k strategy, it entails making voluntary after-tax solo 401k contributions, and then immediately converting those funds to the Roth Solo 401k or the Roth IRA. For tax year 2025, whether you're a sole proprietor or an S corporation, you simply need to have at least $70,000 of self-employment income in order to justify your contribution. Now, to some clarity here, if you're an S Corp, you solely need $70,000 of W-2 wages. If you're a sole proprietorship, you're going to need Schedule C, line 31 self-employment income, and I think that's around $76,000 you would need. And that's because with the sole proprietorship, you have to subtract 1/2 of self-employment income tax from line 31 of your Schedule C. With an S corporation, you don't have to subtract any type of self-employment tax from that W-2 wages. Okay, because self-employment tax doesn't apply to an S corporation. An S corporation is subject to payroll taxes. So there are various contribution buckets for S corporation self-employed businesses. You can make employee pre-tax contributions, you can make employer profit sharing contributions, And then you can also make voluntary after-tax solo 401k contributions as part of the Mega Backdoor Roth strategy. So again, for an S corporation, it's your W-2 wages from your self-employed business that drives all your contributions, including voluntary after-tax solo 401k contributions. So if you're an LLC taxed as an S corporation, or if your business is an S corporation, you're going to look at your W-2, the gross wages is box 1. And you may need to add the amount in 12A of your W-2 to box 1 so that you calculate the contribution based on the correct dollar amount. Now, as I mentioned earlier, other types of self-employed businesses can also sponsor a solo 401k. You just have to make sure you have earned income from self-employment activity. So if you're a sole proprietorship, you're going to look at line 31 of your Schedule C. That's going to be the starting figure for your contribution calculations, including the Mega Backdoor Roth strategy. For a partnership, you're going to look at line 14, code A of the Schedule K1. That's titled self-employment income. So back to the S corporation here. So when utilizing the Mega Backdoor Roth Solo 401k strategy, you can make voluntary after-tax solo 401k contributions of 100% of your W-2 wages. So again, you have to have the necessary W-2 wages from your self-employed S corporation business in order to support the amount that you contribute to your solo 401k plan. So if you want to be able to contribute the full $70,000, which is the overall contribution limit for tax year 2025, you're going to need to make sure you receive at least $70,000 of W-2 wages from your self-employed S corporation. Okay. Now here's some common pitfalls to avoid. Forgetting to share the employee limit. So remember, whether you're making employee contributions, employer contributions, or voluntary after-tax solo 401k contributions, or a mixture of all three, you have to make sure that the overall limit is $70,000. So you can't contribute more than that unless you're age 50 or older. Then you can make a catch-up contribution of $7,500. If you're age 60 through 63, you can make a super catch-up contribution of $11,250 for tax year 2025. Make sure you use the right wages from that W-2. So box 1 of your W-2. You cannot use investment income or dividend income. It's got to be earned income from your S corporation. If your self-employed business is taxed as an S corporation. The 403B exception. So keep in mind that if you work for an employer that offers a 403B, and then you also have a self-employed business on the side, and you open a solo 401k plan for that self-employed business, you have to take into account any contributions that you make to your 403B daytime employer plan. Any contribution you make to that daytime employer 403B will impact the amount that you can contribute to a solo 401k plan. It's going to reduce the total amount that you can contribute to the solo 401k plan by the amount that you contributed to your 403B plan with your daytime employer. Now, if your daytime employer is a 401k, and then you have a side business and you open a solo 401k plan, that's a way to really supercharge your retirement savings. Because let's say you maximize all your contributions to your daytime employer 401k, and let's further say that you want to maximize your Mega Backdoor Roth Solo 401k to your self-employed solo 401k for your side business. The contributions that you make to that daytime employer 401k, unlike a 403b, will not impact the amount of voluntary after-tax solo 401k contributions that you can make to your solo 401k plan. So if you have at least $70,000 of self-employment income from your S corporation self-employed business, for example, irrespective of the fact that you may have already maximized your daytime employer 401k contributions up to the overall limit, you could still also contribute $70,000 to the voluntary after-tax solo 401k and convert it to the Roth Solo 401k, resulting in effectively contributing a total of $140,000 between both 401k plans. That is your daytime employer 401k and your self-employed solo 401k plan for the year. So talk about really supercharging your retirement savings when you both work for a daytime employer that offers a 401k. And if you're also self-employed on the side and you open a solo 401k plan and you have the necessary self-employment income to justify that contribution. So we talked about the contribution limits for tax year 2025 already. Here's a good slide that goes over those. So common mistakes to avoid: waiting too late to open the solo 401k plan. So this slide should actually say after September 15 of 2026, if your self-employed business is taxed as an S corporation. If it's taxed as a sole proprietorship, it would be October 15 of 2026. If making sure that your W-2 wages are not too low, because again, if you want to maximize the Mega Backdoor Roth Solo 401k strategy for tax year 2025, you need to make sure that your W-2 for tax year 2025 lists at least $70,000 of W-2 wages, box one. And then, of course, if you use the wrong solo 401k provider who provides a plan that doesn't allow for the Mega Backdoor Roth strategy. So those are common mistakes to avoid. So next steps. It's best to adopt the solo 401k plan by December 31st, 2025, so that you don't forget. But technically, you have until March 15 of 2026 or September 15 of 2026 if you file a timely business tax return extension, so the Form 1120S for your S corporation self-employed business. So if you're listening to this webinar in 2026, it's good to know, as I mentioned earlier, that you still have time to utilize the Mega Backdoor Roth Solo 401k strategy for tax year 2025. And again, we can help you open up the Schwab company retirement brokerage accounts here in 2025, or we can help you open them up in 2026. And it's the signature of the solo 401k plan documents that determines when the plan is effective. It's not when you fund the plan. Okay. So we talked about how my solo 401k financial helps with the Mega Backdoor Roth Solo 401k strategy. Again, we help you set up the plan, open up the respective brokerage accounts. We guide you on how to make the contributions, the calculations, and the reporting of the Mega Backdoor Roth conversion. So here is my solo 401k financial. Not only are we the solo 401k plan provider, because you need to have a solo 401k provider in order to open a solo 401k plan, but we also provide ongoing compliance support for clients who timely request it. So again, we don't have access to our clients' funds, so our clients will communicate to us when they want to have a Form 1099-R prepared, which applies if they want to take a distribution, process a conversion, including the Mega Backdoor Roth. As long as you timely request the issuance of that Form 1099-R, that's covered in our annual fee. We don't charge additional fees for that service. And we'll file a copy with the government for you as well. Same thing with Form 5500 Easy, which is an informational return that applies to the solo 401k plan. Once the market value of that plan is greater than $250,000 as of the end of the year. You have to add up all the funds in the plan and all the investments in the plan. So all your Roth funds, pre-tax funds, and voluntary after-tax funds need to be added together. And if both you and your spouse are participating in the same plan, you have to add up both spouses' funds in the plan to determine if that $250,000 or greater threshold has been met. If the plan value, when added together, is greater than $250,000, then a Form 5500 Easy needs to be filed. Here at my solo 401k financial, we'll prepare it and file it electronically with the government, and we don't charge extra for that service. That's covered in our annual fee. As long as you timely request these services, we'll perform them at no additional cost. So make note of that. We'll also provide ongoing support, whether it's calculating contributions, making sure you understand the distribution rules, the conversion rules, the investment regulations. Let's say you want to make an investment in an alternative investment like real estate, cryptocurrency, precious metals, and you want to know how that's done and what the regulations are. We'll educate you on those regulations. If you also want to borrow from the plan through a solo 401k participant loan, we'll draft those solo 401k participant loan documents at no additional cost. That's all covered in our fee. Now let's talk about the $1,500 auto contribution credit. So the $1,500 auto contribution credit is effectively a way of the government subsidizing the cost of having a solo 401k plan. It's a dollar for dollar tax credit equal to $500 per year for a maximum of $1,500 over 3 years. Not all solo 401k plan providers provide a solo 401k plan document that has the auto contribution feature built into it. Here at my solo 401k financial, our plan does allow for the auto contribution feature. It's a dollar for dollar credit, and we can actually add this auto contribution credit to existing solo 401k plans or new solo 401k plans. We were the first in the industry to provide a plan with the auto contribution feature. We started offering it on January 1st of 2024. So if you're a client of my solo 401k financial, we've already we started drafting all plan documents on January 1st of 2024 to include the auto contribution credit. However, if you're an existing client from December 31st of 2023 and prior years, we can add this auto contribution feature to your plan now for 2025 so that you can start utilizing the auto contribution credit. You'll submit a support ticket through our website, and we can shepherd you on getting this added to your plan if you're an existing client. Again, all new plans, we automatically draft the plan with the auto contribution feature. So once we add the auto contribution feature to your plan, you can actually opt out of contributing. So you don't have to contribute to the plan in order to continue with the auto contribution credit or to use the auto contribution credit. You heard that right. You can opt out of contributing and you're still going to be able to contribute all the way up to the overall limit. Or you don't have to contribute at all, or you can contribute any amount up to the overall limit. Now you're going to claim this $500 credit each year for a total of 3 years in $500 increments by filing Form 8881. So you're going to need to file that Form 8881 a total of 3 times, once for each year. We do have a video walkthrough and a PowerPoint on how to fill out that form. It's very easy to fill out. For example, if you file your taxes through TurboTax, we have a chat on our My Community. So if you join my community, there's a thread there that talks about how to plan that auto contribution credit on electronically if you use TurboTax, for example. But the tutorial that we have as well, that's a video and a PowerPoint. The form doesn't take very long to fill out. It's a 2-page form. There's only a small section that has to be filled out. So if you join our community, where we have over 32,000 members, you can view that particular chat, that post. You can also, if you're a financial professional, you can also post blog posts out there, link it back to your company's website so that the 32,000 plus members can view your services, and they might even reach out for your services. Now, don't confuse the auto contribution credit with the tax credit, because the solo 401k plan qualifies for the auto contribution credit. It doesn't qualify for a tax credit. Let me share a link with you. Take a look at this link here. Our attorney put together a really good post article that compares the auto contribution credit versus the tax credit. A lot of CPAs, financial advisors, and tax professionals out there tend to confuse the tax credit, which is only available to traditional 401k plans, with the auto contribution credit. They're completely different. The solo 401k plan qualifies for the auto contribution credit, not the tax credit. So the auto contribution credit is the one we just talked about, the $1,500 one. Take a look at that link there, share it with your CPA, your tax professional, help us educate the industry. As I stated earlier, we were the first ones to offer this auto contribution credit, just like we were the first ones in the industry to offer the Mega Backdoor Roth Solo 401k plan back in 2013. So we are the leaders in the solo 401k space. When it comes to regulations as well, we're very well versed on the regulations, hence why we perform webinars on a daily basis. So take a look at that. Let's see if we have some more questions here. Let's see here. Off the topic question. I currently have a crypto trading account in my solo 401k. I would like to open an E-Trade account with my solo, which should allow me to trade precious metals, forex currencies. E-Trade does not allow this. Please advise how I should handle this with E-Trade. This seems a bit confusing. Yeah, it's very confusing because ever since E-Trade merged with Morgan Stanley, they've been very hard to work with. I would steer clear of using E-Trade. Most of our clients utilize Fidelity or Schwab for their solo 401k brokerage accounts. With E-Trade, I've seen E-Trade take a total of 9 months. You've heard that correctly, 9 months to open up brokerage accounts for a self-directed solo 401k offered by a provider like my solo 401k financial. Bottom line is that E-Trade just doesn't understand what the heck they're doing ever since they merged with Morgan Stanley. They just don't know how to open up brokerage accounts for solo 401k plans offered by third-party solo 401k providers. If you really want to use E-Trade, however, we'll gladly prepare those E-Trade brokerage forms and submit them to E-Trade for you by faxing them in. But you're going to find out that it's going to take you 9 months minimum for those brokerage accounts to be opened with E-Trade. All right. So that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so that we can keep building this community. We'll be back here again tomorrow with more crucial content. Until next time, have a great rest of the day.